Are you risking huge fines with e-commerce taxes that you don't understand? Hey everyone, Arjun here, CEO of doola.com. And if you are a new Shopify or Amazon seller, taxes probably feel like a giant puzzle. Rules changing by state, fines lurking, and way too much to figure out. But don't worry, I promise you by the end of this video, you will know the basics of e-commerce taxes, how to stay legal without stress, and why Doola bookkeeping and taxes is the secret to saving you time and money. Plus, I'm also going to show you how Doola makes taxes truly simple, keeping you penalty-free, and letting you focus on growing your store. Without further ado, let's dive in. First off, why are e-commerce taxes so important in 2025? Because e-commerce regulations are changing at the speed of light. Back in 1994, when someone bought a Sting CD online, yep, the first e-commerce sale, nobody thought about taxes for digital stores. But now, e-commerce is vast, but so are the tax rules. With over 12,000 tax zones in the US alone, every state has its own rates, rules, and schedules. One state taxes close, another doesn't. It's a lot, but getting it right keeps your business legal, builds customer trust, and saves you from costly fines. So, what are e-commerce taxes really? They are the taxes you collect and pay, like sales tax from customers, income tax on profits, use tax for untaxed purchases, and VAT for international sales. They matter because messing up can mean penalties, angry customers, or financial chaos. For example, if you sell enough in a state like California, you must collect their sales tax or face legal trouble. Now, here's what you need to know. Number one, sales tax is what you charge customers in states where you have a connection, like a warehouse or big sales. Number two, income tax is on your profits, revenue minus expenses, and some states, like Texas, skip it. Number three, use tax kicks in when you buy something taxable, like inventory, but don't pay sales tax. Number four, VAT is for international sales, especially in Europe, added at every step of the sale. Then, how do you figure out your tax duties? As complex as it sounds, you just need to follow a few simple steps. Step one is find your sales tax nexus or connection to a state. Again, this could be a physical spot, like an Amazon warehouse, or hitting a sales limit, like $100,000 in a state. Step two, know which taxes apply. Sales, use, income, or VAT, based on where and what you sell. Step three is get a sales tax permit for every state you're connected to, or it's illegal to collect tax. Step four, track sales to catch when you hit state thresholds so you register on time. But how about when it's time to level up? As your business scales, you've got to implement a few advanced strategies, and let me share those. First is the Augusta rule. Rent your home to your business for up to 14 days a year tax-free for meetings. Just document it right. Secondly, you can use HSAs or FSAs with health plans to save pre-tax dollars for medical costs, cutting your tax bill. Thirdly, manage inventory with systems like LIFO or FIFO to tweak your costs and taxes. Fourth, for international sales, learn VAT rules to avoid penalties. Doola's experts can help with this. Fifth, check for R&D tax credits if you're building new products to lower your taxes. Here's how to keep taxes simple and straightforward, no matter where you're based. First, use a service like Doola to track income, expenses, and taxes, keeping you ready to roll. Second, open a business bank account with a platform like Mercury to separate personal and business money. Third, stay updated on tax changes with Doola's newsletters and content. Fourth, track taxable and non-taxable items like clothes, which some states don't tax using Shopify settings. And fifth, record any marketplace fees from Amazon or Etsy as they affect profits and taxes. But how do you make sure you don't fall into common tax traps? With that, you don't need to worry because that's why Doola exists. We've got you covered. We will help you navigate sales tax and taxes in different states and make sure you avoid common mistakes. Mistake one, not knowing nexus laws. Selling a lot in a state or storing inventory there can mean you owe tax even if you didn't know. You can use tools like TaxStar or Doola's Pros and our partners to stay on top. Mistake two is bad record keeping. Without tracking sales, expenses, and receipts, you'll miss deductions or face audit fines. Keep records for 3 to 7 years to be careful. Mistake three is missing deadlines. Late tax filings mean fees and stress. Set reminders or just let Doola handle it. That is a wrap on e-commerce taxes for beginners in 2025. I hope this got you revved up to tackle taxes without fear. And if you found this helpful, please like the video and subscribe and drop your questions below in the comments because our team is here to help. And if you are ready to make your e-commerce taxes stress-free, you can book a free demo or start a 30-day free trial at doola.com today. We'll help you handle your taxes, your bookkeeping, and more so you can focus on what you do best while Doola handles the rest. Thank you so much again for watching, and we'll see you in the next one.